Okay, so I know I did kind of, get most of the way of this round one investor presentation, but I'm just gonna quickly see if I missed anything. I'm pretty certain at 1337 yen per share that it's pretty, potentially overvalued, probably overvalued. At the very least, fairly valued for sure. Because they have to execute very well at that price point. Yeah. Trying to see if there's anything, because I didn't read until the very end of the investment presentation, so I'm just going to quickly have a look. See if there's anything additional that I need to account for. We have one viewer right now. Can I just ask you a question if you don't mind answering? I have a fan running in the background right now. Can you hear the fan? Because I have the mic settings set up in a way where certain noises are kind of blocked out. Um, but it narrows the range of noises that can come in, which is mainly my voice. So I want to know if you can hear it or not. Okay, so it says basically says that based on the method used of depreciation, it can affect earnings. So it's saying that um, JGAP would be in the straight line method. It would be based off of X years, and IFRS would be based off of Y years. So IFRS might be based off of a shorter time period, whereas JGAP would be a longer period. So you can see that JGAP depreciation is lower. Perfect. Thank you, Zilia. You are a new viewer. Welcome. Welcome. Thanks for contributing. Where are you based out of, Zilia? If I am pronouncing your name correctly. Zilia. But then if we use the declining balance method, then JGAP would depreciate most of the asset value in the beginning periods and then less in the other periods. So it depends on what method JGAP is using. So if they're using a declining balance method, essentially, then you'd be filing a lot of depreciation in the beginning years, and then your cash flow would look really good in year 3 to year 5, essentially. Okay, thank you very much. As long as it's not annoying and then I don't have to turn it off. Nice. Now, Zilia, this is when I look at my data analytics, 100% of viewers have been guys. Are you a dude that has used a profile picture with a female on it, or are you actually, you know, A female investor. That would you would be the very first female viewer of my live stream so far. So that would be a breakthrough. Damn it, so close. So close. So close to have our first female viewer. Gang Wan Young. Okay, for the purposes of research, we're gonna see who this is because I don't know my K-pop idols very well. Interesting. What is she known for? What is her is a oh K-pop singer. Starship. Is it Ive or Evie? Interesting. Is she your celebrity crush? Is she your like ideal? Okay, let's get back. Let's get back. You know, let's get focused. Let's get focused, guys. Focus on returns. All right. So next company we're going to be looking at is Fast Fitness Japan. Look at that company. I thought I pronounced it correctly. Notice concerning agreement on renewal of master franchise agreement. This is important for Fast Fitness Japan because their master. So Fast Fitness Japan is essentially the master franchisor for Anytime Fitness within Japan. Okay. So Anytime Fitness is one of the largest franchise companies in the world. They have over like 5,000 locations in the world. And their strategy in Japan was essentially just to pass on all the rights, the franchisor rights, to Fast Fitness Japan. And they've been very successful in expanding in Japan in either operating corporate stores and also franchising to franchisees. So I guess the date to renew has come upon us. So I'm just going to read this real quick. Our group guided by our corporate philosophy, imbibed by our purpose. That's bullshit. Doesn't matter. Okay. So as a master franchisee of Anytime Fitness and a pioneer of 24/7 fitness gyms in Japan, we opened our first directly operated Anytime Fitness in Chofu in October 2010. Since then, we have expanded to a total of 1,199 studios, including both directly operated and franchise studios as of May 31st, 2025. Our current agreement is set to expire June 9th, 2025. And we have been in discussions with Anytime Fitness Franchise or LLC regarding the renewal of the agreement, including a review of the terms and conditions. We are pleased to announce that we have reached an agreement with Anytime Fitness Franchise or LLC on new terms. Okay. Okay. Okay, contract term is for 15 years. Nice. Okay. Expected to be minor, so it's probably slight price increasing. Is that No actual details. That's it. Right. Contract term is for 15 years. That's it. Okay, there's 5,572 studios. So there should be no risk of Anytime Fitness dropping off Fast Fitness Japan as a franchisor because they need partners in expanding globally. And Fast Fitness Japan is also has the master franchise rights in Germany, and has expanded, and acquired a few stores in Singapore, although they do not have the master franchise rights in Singapore. But essentially, Anytime Fitness wants to be in basically every corner of the world and own and collect franchise fees from everywhere in the world. So they need a partner like Fast Fitness Japan. So yeah. So they didn't disclose the exact details of the agreement. So there's a correction. Let's have a look at what the correction is. So, okay, slight errors in their balance sheet. Okay, not a big deal. All right, let's take a look at this aesthetic IP. Okay, so 2020 fiscal year 2025 was a year to further expand and strengthen the core domestic Anytime Fitness business and make growth investments in new growth areas, namely overseas, good, new brand and e-commerce merchandise sales. We're gonna quickly look at the valuation for Fast Fitness Japan real quick. There is 7092. So just you guys can have an overview because this name might be new to you guys. But even margins are very healthy, 22%, and the reason why is because they collect fixed franchise fees from its franchisees. Okay, so these are very high margin type of franchise fees, and it's diluted by their corporate stores by a little bit. But the thing is that doesn't have to be the case because once a store, an average fast fitness store, um, gets to above 500 members, then it's already above break even. And each store can situate up to like 900 members, right? So if you think about operating leverage above any member that's above 500 count, once the count exceeds 500, then every additional member basically drops to the bottom line, almost. Um, so yeah, Fast Food Japan is one of the most profitable gym stocks in Japan because of them just putting all the risk to the franchisee and just collecting a fixed fee. That's why their margins are so good. But the thing is, their franchisees are also profitable, and they're also profitable. So it's a good win-win relationship. Yeah, and if you on my Substack, I do have a stock pitch on Fast Fitness Japan. You guys can definitely check it out. It is right here. If you look in my directory and then you go, I have an entire write up on stock Fast Fitness Japan, which is extremely detailed. Yeah, I go through a lot of detail in this company. But TLDR, for people who don't have time to read, essentially, they have done extraordinarily well in Japan, basically grabbing as much market share as possible. They're one of the most they have the most 24-hour gym locations in Japan, and so they've hit a point where like there's a even though revenues are increasing, it's an increasing it's increasing at a decreasing rate essentially, right? So the next pillar for growth of the company, there's a couple ones. Either they can continue increasing their domestic locations. They can open different concepts. So they have the bar method. They have these other type of gym concepts under the Anytime Fitness brand that are owned by Anytime Fitness. But the thing is, they're not allowed to create their own concepts, right? Because they are in this relationship with Anytime Fitness. The downside is that they cannot create their own gym brand. They can't create any competing business. Okay, and now the other part of growth is international growth. So they have acquired a few stores in Singapore, and they've also acquired the master franchise agreement for Germany. So they can open as many German locations as they want and franchise and collect franchise fees from franchisees in Germany. In Singapore, they can't because the situation in Asia is that there's one company that owns a master's franchise rights for Singapore, Philippines, I believe Vietnam, and like yeah, it's basically all across Southeast Asia essentially. So yeah, there's some details that you can figure out in my stock pitch, but TLDR again is that I see a huge upside potential in Fast Fitness in Japan if they were to buy out the company that owns the master franchise rights for all of Southeast Asia. And because they have been acquired by a private equity firm or jointly invested by private equity firms and owners of master franchise agreements, I believe that if it's called Anytime Fitness Asia, let's say, that they can be bought out by Fast Fitness Japan because they do have enough cash. They have enough cash to do such an acquisition. Okay. Yeah, let's take a look at the multiples, valuation multiples. Like EV/EBIT is like pretty low. It's not that, not that extreme. Of course, we have to look at the most recent multiples as well. Yeah, we're trading at more like growth multiples now, but before it's pretty undervalued. Payment, you guys. Yeah, so revenues has increased and increased to a level that's even beyond pre-COVID. Yeah, so what I see right now, essentially, they're in a phase of operating leverage where their corporate-owned stores, they've gone out of COVID now. People are more willing to go to the gym. There's also people that move to Japan as well, right? So the good thing about Anytime Fitness is you can literally use your gym membership anywhere in the world that there are fast Anytime Fitness gyms. So if you're like in Canada, there's Anytime Fitness. So if you own a pass in Canada and you go to Japan, you can still work out. It's great. But I think the main local advantage is if you have family member in Osaka and you're in Tokyo and you take the Shinkansen to Osaka and you visit your parents, you don't have to stop working out. You can still go to the gym and work out. I think that's one of their core because they have the most locations and the second most locations is not even close in terms of real gyms, I would say, because there is another company called I believe they're called RokoZap or something like that. Wait, hold on. Zap. Rezap. So Rezap owns stores as well. But then I wouldn't call them a real gym. They're more like for the very novice. I don't see a great future with Rezap in my opinion. So yeah, that's not a stock I would invest in. But besides Rezap Group, in terms of real gyms, Fast Fitness Japan owns the most real gyms, in my opinion. And what they're doing right now is realizing their operating leverage because now they're your stores are basically, growing in membership. Like they're kind of like saturated the market, and now it's like feel not the initial stage of growth was opening as many stores as possible with either with their corporate stores or with their franchisees, and because of that, a lot of them like hit 700, right? So 500 is break even. They hit 700 members. So what's happening is that member count has been increasing steadily, and as we said, every additional member above 500 goes straight to the bottom line, right? So operating leverage t- turns up substantially for this company. Um, yeah. And then with this additional cash flow, it's like, oh, how do they utilize that cash? Well, they do have areas where they can utilize cash. They can utilize that cash to grow in Germany, to grow in Singapore, to acquire master franchise agreements. Many ways for growth for this company, in my opinion. So they say their new areas for growth are overseas, new brand, and e-commerce merchandise. So this is something new. New e-commerce merchandise. They launched like their own Fast Fitness Japan apparel, which actually looks pretty aesthetic. They might showcase it in thing later on. So just a brief overview of the timeline. April 2024, they acquired Anytime Fitness Mattress franchise rights in Germany. Um, they acquired two franchise clubs in Singapore, but this does not include master franchise rights. They opened their first bar method in November 2024. I'm curious to see how this is done, honestly, because I actually don't like the bar method that much because it's an owner operated business, and I don't typically like owner operated businesses too much. So they opened a new online shop called Aprop for their e-commerce merchandise. Yeah, so they mainly grew revenue through just selling memberships, but now they're trying to like get more other revenues. Probably by launching the site, they can get more sales revenue, either creating a marketplace because they have so many members across 1,200 stores, right? They definitely have the customer base for that gym, so they can definitely use that to sell protein powder, um have like some sort of marketplace for Anytime Fitness apparel, for example. So they're currently in the phase of strengthening and expanding existing business and also investing in and nurturing new growth areas. Before I continue, let me just quickly do like a quick evaluation of the business. So recent quarter should be year 20. Huh, okay, let me have one. Why is it so slow? That's really annoying. My apologies, guys. This is testing my patience as well. Oh my god. Okay. Um, what the heck? Okay, found it. Okay, share account. Oops, my bad. My bad. This quarter is fiscal year Q4. 8 May 15th. Good. Okay, share price. Okay, share price is 542. Keep in mind, Koyfin is 1 day late in terms of their pricing. Be cognizant of that. Okay, slight decrease in cash. Nothing else. Investment securities, barely. Long-term loans receivable. Meaning that debt. Long-term, current portion of long-term borrowings. That is it. We're gonna assume bonds payable is included in that. Down as well. Now let's take a look. Oh, we have a new viewer. Welcome. And if you're not subscribed, please subscribe. I have a function where if you subscribe, there will be an animation, and then your subscriber name will be replaced. Will replace Gary Mignon. Guy's been there for a while, even though I've been gaining subscribers. Just that it only comes up when I live stream, so it's kind of annoying. But if you would like to replace Gary, please subscribe. Oh, dividend has stayed the same. The EBITDA there. Okay, so if you have EBITDA, okay, what's their forecast for that year? Okay, they have high and low. That's annoying. Okay, I'm gonna have to use an average then. Uh, Okay, now calculate temperature. 550. There we go. Oh, large depreciation. Okay, let's take a look at their capex real quick. They have cash flow statement. They do. Nice. So, 1008. Different numbers. There are probably some other things captured into it. Yeah, like amortization, roughly. SPC included in that number. Close, maybe. Hmm. Yeah. Yeah, it's a marginal difference. Okay, capex. Huge different array here. Hello, 8. Welcome back, viewer. Welcome back, welcome back. Oh, we're back at 4 concurrent viewers. Welcome, welcome. If you guys want a shout out in my next video, you guys have to, type in the chat so I know who you guys are. Okay, so purchase of tangible asset. Very few intangibles. What else here? It's from that. No. 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 Okay. Okay, let's see what the forecast holds for this company. Let's see if analysts say anything about the distribution. Oh, thanks for that. I always forget that. Fast Fitness Japan 7092. There we go. Very nice. Very nice. Yes, we're looking at Fast Fitness Japan currently right now. 1250-1899. Guess I'd rather use a higher depreciation. Probably. That's what it's implying. Enterprise value valuation. On enterprise value alone, because they have so much cash. Trading actually quite cheaply still at this price. Just that on a PE basis, it's a little more expensive. The question is, can it use cash and can it use debt? If it can tap into those two, which is what I talked about earlier, like if they're able to expand in Germany in a meaningful way, if they're able to acquire master franchise agreements in Singapore, in Southeast Asia, across different Southeast Asian countries, then this would be huge in allowing them to allocate capital. And I think they can. I think it's possible. The valuation is pretty good. Not bad. Keep reading along. Tata Motors company. I will consider it after fast food. Is it, does it look very cheap? Sell me on Tata. You know, usually I don't need much selling on Tatas. In this scenario, I need some selling. So number of clubs increased by 60 year over year. That's good. Number of members increased 133,000 year over year. Very good. So if the 133, this is around, it would be 850 last year. So it's increased by roughly 15%. Number of overseas clubs plus 3. Franchise clubs from 1010. So more franchise clubs, which is good. Okay, so based off this, we can calculate average member per club, which looks here just even visually just looking at this is over 800, which is really good. That means our franchisees are doing phenomenal right now. Let me just quickly do some analysis. So we have 1010, 184 members. I'm an investment bank. No, man. I'm just a passionate investor, dude. Members per club. 750. Yeah, so directly owned, company-owned clubs still lags behind franchisee clubs. So franchisees are doing phenomenal. 800 average of 800 members per club. That means that our franchisees are doing really well, very very well. Way better than our company in terms of company-owned stores. But 750 is still not bad because from my understanding that once they pass the 500 mark, their stores become break even or past a break even point. So then they're basically 250 above the break even point. And just that franchisees are doing even better, right? So if you think about like store openings, right? Like franchisees are gonna be fighting to open new stores because like, they're just doing well, right? Yeah, especially if they use leverage too. All right, you want me to look at Tata? What is the ticker for Tata? An Indian company, Tata Motors. Wait, which one do you use? All right, take a look. Okay, we're taking a special request right now. Okay, what's the description? Tata Motors limits. It designs, develops, manufactures, and sells various automotive vehicles. Operates through automotive and other segments. The company offers passenger cars, SUVs, light vehicles. All right. Defense vehicles. Oh wow. Spare parts and accessories. Manufactures engines for additional applications. Axles, transmissions. Factory automation equipment. IT, insurance, broking, vehicle financing. So there's a financial arm. Offers products under the Tata Daewoo, Harrier, Safari, Curve, Nexon. Okay, a lot of different brands. Even their Jaguar and Land Rover brand. Okay. Operates in India, China, and the US and UK, rest of Europe. Operates its products to fleet owners, transporters, government agencies, defense, public transport, enterprises. Okay. Take a look at well, it's a car company, so let's see what the profitability is like. Probably in single digits, if I were to guess. Why is my internet like this? Why like this? Okay. All right, so had a couple of rough years, and then operating leverage kicked in somehow due to a decreasing in SG&A, as it's the ROE has been quite abysmal for a period of time, and then has done well. Okay, Bulbin Studio. Thanks for your request. What has led to their recent increase in profitability? What do you know anything about the stock that you can share with us? That'd be very much appreciated. And previously, before that, they've been single digits, very negative, and then suddenly done well for some reason. More inventory turnover, that's good. I won't be discussing that on my stream. I like to keep certain things private, so just treat me as a very passionate investor. That's it. Days sales outstanding has been decreasing. Is good, and days payable outstanding is also decreasing, which is also good. So operationally more efficient. Take a look at valuation. Okay. They have cash, a lot of cash in that, but that's probably has to do with them needing that amount of cash to maintain their daily operations because they have to buy parts, they have to maintain inventories to build their vehicles. So this is probably in relation to that to ensure they have good working capital to meet their working capital needs. Total debt increased for a period of time and then has decreased. Good. So one thing to look at is how much burden did the debt have on the capital structure and on their profitability. So potentially by paying down the debt, they're able to increase their earnings because of having a lower debt load, essentially. Oh, they're growing. They were trading at growth multiples at one point. Okay, so value multiples and then growth multiples, but probably because they were earning so little money. Now they're at times forward PE. So based off this market cap, let's see, what is that? 500 net debt, so like 3 billion. 3 billion enterprise value. 3 billion enterprise value on most recent in okay, trading less than 10 times then. And how about yeah, less than 10 times on last 12-month operating income. What do you think are the growth opportunities for Tata? Hold in studio. Hmm. CapEx recently increased. Free cash flows gone. Oh, I see. Recently good. Historically been bad. Well, I'll take a quick snapshot. I'll give myself 15 minutes to look at this company, and then we'll see. FYI, I've never looked at this company before. How's our share price done? Oh, so August 2024 as high of 1150 around that range, then dropped by 50% almost. 20 dropped to wow, dropped to like almost $60, $70 I say, and then over 10 bagged. Yeah, almost like 15 bagged, 14, 15 bagged. Okay. Golden Studio says, is there any impacts of Israel and Iran war on Asian markets if war goes long? I haven't really established my thoughts on that, so yeah, I haven't really thought about it. But I do know how I would react though. The way I would react is essentially I would look at my basket full of companies and see which ones wouldn't be affected by war, right? And yeah, and just pay attention to those ones so that if the market does crash because of the war, then I can get in, right, and buy aggressively. So that's what I would say on that front. So are you indicating that because they said in the description for Tata that they do defense sales as well, right? So if there is a war going out, that Tata Motors would get some defense related sales boost potentially. Quarter ended, year ended. Wait, hold on a sec. This doesn't look right. Why is it different? Oh, this is an Indian rupee. Yes, we have a subscriber. The Velvet Lens. Thank you. Thank you. So whoever wants to replace the Velvet Lens, all you need to do is subscribe. Once you subscribe, you get that dope animation. Don't you want to hear that music? Isn't that dope? That's so dopamine, enticing. Yeah, so now we're 82% at our goal now. Like for some reason the data on the weekly sub thing doesn't automatically update. I have to manually update it. So before each stream, I just manually change it. It's really dumb. I don't know why it doesn't change on itself, but the recent subscriber one does change on itself. So if you have not subscribed, please subscribe and hear that sweet, sweet music. Okay, so this is probably so what's the conversion between and rupee version? What? Sorry, I haven't looked at many Indian stocks, so forgive me if this is really dumb. Can't be the same though, because this is operating humor is 336. So okay. This doesn't look like it's in rupees. Total income. Expenses. Profit before tax. Just one. Yes, thank you, Bulbin Studio. Thank you. Thank you for subscribing. Now you guys are gonna battle it out and see how many um to see who's gonna stay on the recent subscriber list. What? Okay, so this isn't a different. Look at the wrong statement. Kink interest. That's okay. So Bulbin Stu says, "Hey buddy, God bless you. I'm from India. I have kink interest in financial markets. So could you give me an idea of what should I do to get into this profession?" First off, if you don't mind disclosing, what is your age? Are you still in? Are you in an undergrad right now? Are you in high school? Have you graduated? Right. I think if you are in high school, the easiest way is to get into business school, into a good business school, get good grades, and I don't know what are the best business schools in India, but I think IIT is one of the top ones, right? It's like the MIT of India, right? I actually have a former colleague that went to IIT, but I think he took engineering, not business. But then after graduation, he landed like an equity research job. So he was able to move to Canada to work. So that's one way to get in. Yeah. Okay. So you graduated in BCom. Your age is 22. Okay. So I would say I also don't know what the market for finance grad is in India. I'd say network a bunch. Apply to jobs. This is very general advice. I'm sorry, I can't give you any specific recommendations for India, but I'd say if you have a stock pitch on hand, do your own research. Have a stock that you can stock pitch at a job when you get a job interview. Network a bunch. So, which are firms that you want to work at? Are there alumni from your school that you took your BCom in? Can you connect with them and go for a coffee chat and then try to translate that coffee chat into some type of job interview, right? If you can. And and then if you don't have much luck finding it post grad, because sometimes people find jobs when they're in undergrad, when they're already in undergrad, but after you graduate, it might be more difficult. So the pathway from there is if your family or your government can support you financially, then potentially you can do a master's, right? And then you take a master's and then go through that route to try to get a job in finance. Yeah, that's. I know that's pretty general advice. You probably heard it. I don't know if that would help. Hopefully it helped a little, but yeah. I think even better is literally just find someone in your network on your LinkedIn. I don't know if India uses LinkedIn, but whatever you guys use, find an alumni, talk to them, ask them how they got in, and what's even more helpful is you find someone that's in your predicament, right? So you find someone who landed a finance job post graduating. Ask them what their path was, how they were able to land a job post graduation. I think asking someone who has succeeded in the path that you want to follow is very helpful. I'm from Canada, so it can be. I don't know how valuable my advice would be. Yeah. Okay, what's pissing me off here is that this is in a completely different oh no, this is normal now. This is normal now. Okay. Income 445, total expenses 411. What is cost of materials consumed? This is not total income, this is total revenue, technically. Right? Cost of materials consumed. That should be in COGS, right? So okay, so after that they make 34. That's the unit here. This better be in millions, right? 34 billion. What is this? Hmm. $15. It's in 15. So hold on. So okay, hold on. How much is one in rupees? That should be or notes the quantity of 10 million. 10 million. So okay, I get it. So this is 340 million then profit here. And this is 4.4 billion. Am I correct? Right? Yes. Okay. Okay. 1397. 439. Okay. A little bit off, but sure. In that ballpark. Okay. Okay, so we determined earlier that the enterprise value is 1 month. Well, this is a little bit outdated. Okay, I'll quickly ramp up an analysis on Tata here. Company Tata Motors, and then ticker is whatever. And then if we're at fiscal year 2025, we don't care. 674.75 shares outstanding. Shares out. Outstanding. Shares. Do you have share data, bro? They have EPS. You have EPS, but you don't have share count. $31. Come on. Come on. Nope. Segment-wise financial snapshot. That's very helpful. Oh, that's okay. I'll try to give you another 15 minutes. I don't know what JLR is, but Sorry, I will not be sharing my Excel spreadsheet. Sorry, my own. I recommend you create your own because the reason why is if I attach my Excel spreadsheet and there's anything wrong with it, I don't want to be liable for any like miscalculated formulas. So the best thing is for you guys to make your own Excel spreadsheet in that regard. Do we have any share counts? Shares out. Outstanding. Damn it. Type of company doesn't put in their shares outstanding. That is so annoying. Should I do the scapegoat method? I don't like doing this, but 3.68 billion. 3681. Okay, we're gonna trust that a lot. I don't prefer doing this method. I'd rather find it, but then we're kind of on a time crunch, so I'll let this pass. Not quite happy with this though, but alright, we're gonna let this pass. Okay, do they have a balance sheet? I'd like to look at their balance sheet. Segment assets. Okay, non-current assets, current assets. Okay. All right, cash. So cash and cash equivalent somehow is like this, which is strange. Oh, this is in 10 million, right? Oh, okay, rupees, but in 10 million increments. Okay, that's what it means. Okay, we're fine. We're fine in that regard. Okay, so this is technically more than that. This is technically 340. Sorry, 343. Is that how I do it? Okay, we have no choice but to add 0 here. It's kind of annoying. Short-term investments 271990, I guess. Bank balances other than the above. Okay, long-term investments. So there are investments. That's 29230 then. Okay, debt. Current liabilities, borrowing 2222820. Anything else? Lease liabilities. Nope. And then just long term, trades payable. Yep. The next one, 402170 then. Correct. Hmm. Wait a sec. Okay, no, that's right. Okay. Book value. Book value. Equity. It is 1227540 then 2 times price of book. Everyone wants my streets. Yeah, yeah, yeah. Especially girls, right? Everyone wants to get into my sheets, right? I'll contemplate it. I'll contemplate it. Not right now, though. Not right now. Maybe in the future. Maybe in the future. Yeah. Yeah, I highly advise any serious investor just to make one for themselves. Just do yourself, the favor of doing it yourself, anyways. It's a good practice to make one yourself, right? So that especially for you, Bulbin. Like if you're applying for a job, like if the interviewer asks you how to calculate enterprise value, you have to be able to do it, right? So creating this Excel in and of itself is practice. Okay. Yeah. Dividend. Do they pay a dividend? Mm-hmm. The board of directors recommended a final dividend of 6 rupees per fully paid up ordinary share of 2 each. What does that mean? The heck does that even mean? Dividend yield is 0.89. Okay, so if I had to reverse engineer that, let me see if it is 6 then. Okay, yeah, it is. Okay, it's just 6 then. Overthought it. Quite a bit of intangible assets. Is that correct? 48. Okay. Total assets. Current liabilities. I wish they would just like put it in rupees instead of doing this crap, making everything in tens. This is annoying. That is assuming if I did it correctly. I hope I did. Two times price of book. Cash and debt kind of offsets each other. Is that correct? Is that correct? Huh, they said they have way more debt. Q3. Q4 over here. 21 billion. Yeah, that's... Let me double check. Hmm. I don't see it though. Yeah, that's correct. I don't see any other borrowings here. How did they calculate it? How about the previous periods? 3, 6, 6.2. Oh, last period it was really high. So they did pay down debt quite substantially. So 220 million here. Okay, so it makes sense. Wanted to sanity check to make sure. Okay, how's our income statement? Okay, so last period, this period, 2024, let's say, sales were 0, then 4459390. Operating income. Yeah, this is mainly adopted to Japan, so just for hmm. Oops. Oops. We'll try I did that correctly. Yeah. Yeah. Yep. 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 Okay, depreciation here 272390, and then over here 232560. CapEx. Capital expenditure, purchase of cash flow statement here. Yes, they do. Hmm. Why are they buying so many intangible assets? Do you know what the tax rate in India is, my friend? Yeah, why do I have to buy so many intangible assets? What the heck? I'm gonna look at Koyfin and take a sleeper approach here. Figuring out income tax percentage. Okay, we're gonna wrap this up. I'm gonna quickly look at what the tax rate in here. Oh, it might be actually in the analyst list. Effective tax rates 23, 21, 27. India corporate income tax. Up to 30. 22.5 to 25%, 20 for non-publicly traded companies with exception. Corporate income tax in India stands at 34%, 35%. Okay, not much guidance here, but I'll just use whatever they have over here for now. 31 and then 27. Probably own some like subsidiary business where it's like a certain way. Welcome, we have a new viewer. Okay, this is a little bit cramped, so let's do. Okay, this is remind me, I'm gonna move this over to the other side so I can fill this out. Because we are on a time crunch. Okay, they're saying it's gonna drop. Interesting. 0 DNA. Three 6410, yeah. And then you have this much. What the crap? Oh, no ordering profit, that's why. What is that then? Let's see here. EBT is 273, 2731800. What the f? No, that can't be correct. No. I added another 0 by accident. For sure, yeah. Because this is based off a different rate. No, definitely did not do that correct. Sorry. Minus the 0 here, ignore that shit. This is inclusive of both then, I would assume. Yeah. Guess they're investing heavily. They're growing. Yeah, I don't. Okay, so you have This is okay because I have limited time. You know, since it's a car company, right? So their margins are going to be in low single digits, but these are workable margins, right? They're not like 1 to 3%, right, or 4%. So these are probably decent margins. So look at a couple of things because I'm not really. I'm new to Tata, right? Does Tata have some kind of competitive edge in India, where basically every other car manufacturer that's international has to pay up the ass in tariffs, correct, to protect the domestic market, right? So that could be its competitive advantage in that they get better, lower. They can charge lower prices relative to their competitors because of these protectionary policies, call them. Multiples seem low enough on enterprise value basis, right? Likely because they have free cash flow is kind of trash. Give me 1 second. Okay, free cash flow is trash mainly because they are actively investing into their business. So if we use like an even DNA and even capex type of scenario, then the multiples would not look like this. Right, so they're actually much more favorable. So I think, okay, the next thing you have to look at is there some industry within India or the neighboring countries where I can substantially grow sales in a meaningful way, or they have some competitive advantage in terms of like in China, EVs are dominating right now. Is it possible for Tata to really like make their mark in the Indian EV market, right? Or are they such a low cost producer of just cheap vehicles, right? That just based off of volume they're able to outcompete, right? Um, what else? ROE looks really nice, right? Like ROE looks really nice. Um, yeah, but I don't see. I think okay if it's yeah. So I would look at it in a couple of ways because in sorry I'm rushing through this. Yes, okay. Focus areas. Let's quickly just view this crap real quick. Okay, so what did they do? What did they do? What did they do? Why, how did I get that far into the thing? Okay, so let's see. The highlights. Okay, so they do consumer vehicles, they do some commercial vehicles, and they do commercial and consumer. Um, seems like they run the Range Rover and Land Rover. Do they own them outright? Does Tata just own the entire company, or do they just have the kind of like licensing for that? So I'll look into that as well. Um, I also remember when we initially did the screening, they had operating leverage. So what is the reasoning behind the operating leverage, right? Were they able to lower costs by acquiring some like? No, they shouldn't actually acquire any manufacturers because that's a bad business in and of itself. Um, hmm. Yeah, essentially, what has led to their margin expansion? Essentially, figuring out that part, and then what are their growth opportunities? Are they expanding their, selling their vehicles in the other regions? Since they have Range Rover and Land Rover or Jaguar, do they have really good margins because you just sell them at like these premium prices? Commercial vehicles, okay. Well, domestic market share has been dropping, so that's not very good. So why is it that it's dropping? That's something to figure out because that's against the thesis, right? We technically don't want it to be dropping, but if it's dropping, like, is it because oh now there are other commercial vehicles are going to U.S. and other countries, and maybe that factor? Volume mix, realizations, variable costs, fixed costs. They tell me much. 10% margins in their commercial vehicles sounds pretty good. Looks pretty good. Okay, the industry for commercial vehicles is increasing, which is good. EV buses. So I'll look into like how they're doing in the more like technological innovation part of the automobile industry, which is like EVs, I guess. So how they're doing it there. Smart spare part sales. Okay. Fleetverse, Tata Motors. So do they have like some secondhand buy and sell market that they're doing? Connected vehicles. Hmm. Passenger vehicle. Okay, so let's see. Domestic market share has stayed stable around 13%. You also have to really do analysis of their competitors, right? This is a very competitive industry, right? You can't just look at Tata by itself. You have to look at pretty much everyone in the industry to see how they trade relative to its competitors. So I really don't know whether this is like they're trading at a premium to market or like, you know, petrol, majority of diesel, and EV is 11%. So it's fluctuating, and CNG, no clue what that means. Ah, so EV market share went from 84 to 55%, which is oh, it's a charging network. Okay, so if we take a Tesla type of value, outlook on the company, right? Like what percentage of the, charging network do they own, right? Um, course, there's going to be new entrants entering the EV market. You can't dominate that for sure. Right? If you have a Porsche, you know, Taycan, for example, that's an EV. And drop in EV volumes. Commercial vehicle plus passenger vehicle investments. Oh, I think JLR is Jaguar Land Rover. I think that's what that's. A positive EBIT around 10%. Good. Tata commercial vehicles 21 bits to another 10%. Tata passenger vehicles. This is the shittiest, which is very. This is definitely the most competitive for sure. But EBIT margins are like, what is that? 1.5% almost. So okay, but it's also the lowest, right? So it seems like the main driver for that's right here. I should have just looked down. I'm retarded. Um, so the driver for growth is Tata commercial vehicles. We want to see that growing, and then Jaguar Land Rover is an international brand. So I just double check whether this is licensed or is this they actually just own these companies outright. The nice thing about having luxury car brand, which is Jaguar Land Rover, is people are willing to pay up for these vehicles, and there's some like tax incentive apparently in the US for this for vehicles this big or something like that. Um, but yeah, Tata passenger vehicles has to compete with China, right? Which is kind of crap. Uh, Consolidated. Oh, this is last year. 3.8. So Jaguar Land Rover increased, stayed the same. Commercial passenger decrease. So probably increased competition in the passenger, but this one only takes up like 125 million. Sorry, 125 billion rupees. But that was quarterly. Oh, that quarterly. My bad. 9.1, 0.9. Really bad. Annual basis. 5, 8.5, 9.1. Okay, so commercial has gone better. Basis. Passenger has gone worse. Hmm. Oh, wow. On an annual basis, only 75. Commercial. Okay, so I thought the commercial vehicle segment would be a much larger segment, but it seems like that's not the case. So what's really driving the profits here are JLR, Jaguar Land Rover, and the second is commercial. 5, 25 out of 28, so 80% of around 80% of margins are coming from these two segments. So these are the most important segments. So then the analysis becomes, okay, is it possible for margin expansion to happen in this region? Because if you can go from 1 to 2%, that increases substantially, but then this is only accounts for 3%, 2%, a little over 2% of all operating income. Okay, pretty bad, but kind of JV performance. Yeah, so overall healthy margins in these two segments. So you look at how secure is this? Is this going to be repeatable? Is this performance going to be maintained into the future? And then what's the trajectory for commercial vehicles? And then whether there can be some upside, because this is super highly competitive. The passenger vehicle is probably the most competitive. Whether there's some upside there, or they're just going to struggle or become completely obsolete, right? And then what's the valuation of each of these three segments, basically? And what is in others? I have no clue what's in others, so you have to take a look at that. So I would say all in all, like decent, not bad, not an overwhelming yes, like, but like pretty good, decent, decent. And they're obviously investing for some reason, so figure out what they're investing, whether they're wasting capital and whatever they're investing. They're buying a lot of intangibles, so they're probably trying to compete on the technological front or to revamp their technology for the commercial and passenger vehicle line. So I mean, I would say automotive vehicle companies are very competitive, and you have to constantly invest in like capex to stay competitive. So free cash flow looks really crap. So I wouldn't say this is undervalued. I'd say this is potentially even just fairly valued. Potentially, that's my view on that. Could be wrong. Take that with a grain of salt. Uh, okay, going back to fast food and yes, fitness Japan. Yeah, so what we analyzed earlier was that we really like the store count. This is really good. Means that franchisees are doing well. If franchisees are doing well, then there's no risk of them not paying our fixed fee because the franchisees are really cooking in terms of the P&L department because they get to keep all the upside, right? They only have to pay a fixed monthly. It's not variable, right? So the franchisees are doing very well. Okay, I'm gonna turn off the fan because it's getting a little cold. Give me a sec. Bulbin, I gave the conclusion. I gave a conclusion. It's an open-ended, basically. It looks fairly valued, but you have to come to the conclusion yourself. I can only do so much in 30 minutes, I think. Yeah. You will have to do the additional due diligence to determine, the validity of what I said, but it looks, potentially just fairly valued, even at those multiples. So domestic business is doing good. They were able to open 71 clubs, four fewer than planned, but that's okay. That's quite in line with their projection. Um, okay, so sales and merchandising commission income increased with franchise clubs, gaining more members and with more clubs being open. Overseas, the German and Singaporean companies became subsidiaries as planned. Yep, they acquired master's license. But at the start of the period, they expect to open their own directly operated stores and franchise stores. They will need time to establish a local organizational infrastructure and process for clubs and franchising. Okay, so they're starting up the ramp up process, which means current margins could be even higher if they didn't have to spend the SG&A on hiring new employees for the German part of the business, the bar method business. Okay, yeah. So first store was open in 2024, but net sales fell short of the period start target because more time was needed to establish a profit model. So they're figuring out how to make this business profitable. I will say that the bar method is a really crappy business because it's an owner operated business where the owner of the bar method is also the coach, the lead instructor, right? So if you think about it from a purely profit perspective, if the lead instructor is not there, you have to hire someone to run the business, right? And I don't know how much profit you can cut out from the business's profit structure to hire someone to do that. Okay, delay in opening the e-commerce store, resulting in lower sales. Here's start target 103. Okay, so they really missed it by a lot. But I think the next year is you get better idea. I mean, outperform based on this time period, but I don't know if a longer time period. Satisfying the continued listing criteria of TSC Prime, right? Okay, so previously we knew that this one of the major shareholders of the company owned like substantial stock in the company. I think some really high amount, resulting in a number of tradable stocks basically being very low. So what they wanted to do was to incentivize him to sell some shares so that it would open up the tradable shares. So we are concerned that our tradable share ratio is below the level specified in the tradable share market cap criteria for remaining listed on the TSE Prime Index. In an effort to address this issue, we tried to persuade Akira Okuma to sell some of his shares in the company. However, Okuma declined to sell shares owing the low stock price and other market circumstances. Nonetheless, we are now satisfying all items on the continued listing criteria on the TSE Prime market as a result of implementing actions set out in our plan to conform to the listing criteria. In our medium-term management plan, including actions to achieve sustainable business growth, actions to reinforce investor relations activities, and improve market recognition. Let's see, number of tradable shares. This tradable shares market cap. Tradable share ratio, 40%. Oh, so they satisfies all of it. Okay. Daily. Okay, so mainly it was because of the low share price. Now the share price has gone up, so they're over the they're over the market share market tradable shares market cap essentially. 40% is tradable. Okay, so they're in compliance now. Before they were not in compliance because it was below 10, and now that it's above 10, we're good for now. So membership fee revenue in their directly owned operate stores increased by 15%, which is good, which is in line with what I thought because their average member per store has increased, which is really good. Sell merchandise drop 10. We should be seeing this grow over time. Sell from participation, multi income. It's 19. Awesome. Oh, probably because they opened some new stores. Current revenue increase 89%, which is good. So before they pointed towards a decreasing operating profit margin because of their investment in Germany, trying to expand over there. So now it's back up slightly. They spend a lot more on advertising, which seems to have helped because now they have more members and the average member per store has also increased. Yeah, so remember what I said about each additional membership really is additive to the bottom line. So net sales impact is quite massive. Um, and I guess costs went up, probably personnel expenses went up, commission expenses went up, and then advertising also went up. New brand launch, site construction costs. Okay. Progress and investment plan. The investment amount during the medium term plan is 9.6 billion yen. They have invested 3.7 so far. So most of the amount spent is on further expansion of AF business in Japan. Most of it went to directly operated stores, which is fine. Renovation, nationwide promotion, orders relocation, merchandise sales. Commerce website. They're gonna spend 0.4 billion. That's 400 million, which is like $4 million on it. Free cash flow went down because of uses of cash. for financing and investing activities. Increase in net sales, increase in number of clubs continues to increase, which is good. I do think at one point they should also do a switch on the other end, which is instead of doing franchise clubs, they don't directly operate stores. I think that would be a good mix. Yeah, there's quite the increase in members on directly operated franchise. Total member count increased by 130,000. That's very substantial. I mean, just the franchise stores by 116. Look, so yeah, so everyone is profitable. So directly operated clubs and franchises are also both profitable. Number of club members is set to break the 1 million mark, which is good. This year, to commemorate the achievement, we have organized a special promotional campaign to make this year the anytime year. The special promotional campaign will run throughout the year to express our gratitude. Nationwide promotion rollout, TV ads, online ads. Yeah. Their ads also look good too. Yeah. They're all 47 prefectures. Yeah, so their marketing spend is doing good, like doing a really good job of attracting members. That's what it seems like. Which can't be like, it could be a combination of like what are they doing with social media? So the marketing department is doing. The number of new members is highest in the summer months when they do the summer campaign, more so than the winter campaign, but both do well. Okay, so now they've exceeded the pre-COVID level of 811, right? Nice. Yeah. Yeah, I'm curious what their social media efforts are like. Eight. Yeah. But what are they doing worse? I've watched their ad. It looks quite aesthetic, honestly. It does make the gym, the fast fitness, anytime fitness gym look like a place you want to go to. It is aesthetically shot. Age composition. 2029, that makes sense. 3039 makes sense. And yeah. Anytime fitness app. Oh, monthly average user has been increasing. The number of people using the app is really good. And what's good about that is that for the e-commerce store for the anytime fitness is kind of linked to that. So the more that they use the app, the better it is for the pass. Another feature of the app is that you can see how the traffic in the gym at any given time. So if it's traffic's too high, then you can avoid going in peak hours, and encourage use of personal training. Yeah. Germany. Okay. There are new openings. They'll open multiple directly run and franchise. Specifically, in addition to opening the second directly operated club in April, the third and fourth clubs are scheduled to open in August and October. A new franchise agreement has also been concluded with one company. Okay, opened in April. But in 2000. They're doing a bake store here. Wellness strategy. That's good. There's some Singapore. They operate 2 franchise clubs with the aim of securing a base for overseas operation, acquiring know-how in the operation of overseas clubs, and training overseas staff. Plan to open a 3rd franchise club in Singapore in July to secure a certain scale and operational experience in different commercial areas in order to acquire globally oriented anytime fitness club operation. Dude, this is really teasing at the fact that they might actually do that. And multi-club operation know-how entirely different from Japan, and to improve member and franchise owner satisfaction by returning this know-how to the anytime business. This seems like a teaser. This might actually happen. Oh man, wants me to restart my computer. That right now. Nanyang Technological University. Brand development. Did bar method. Okay, this one is interesting. And I don't think it's gonna do well, but as part of our growth strategy, expand and diversify business portfolio. We open up our first directly operated club, the bar method. You go ka. You go ka. Okay. Okay. Mainly for women to cultivate new markets and members, aiming to establish a business model for multiple club and franchise development as soon as possible. I don't like the business model though. Establishing a club profit model as soon as possible by training instructors and building studio operations per club, accumulating and putting into practice know-how. Multi-club operation. Establishing and verifying studio operations at multiple clubs, establishing an instructor training program in Japan. Second directly operated club scheduled to be opened in June. Utakotamagawa Club. Utakotamagawa. We concluded a master franchise agreement. Yeah. Okay, not much information. Just that the sales weren't that great, but so this one's interesting. They put an URL. I gotta click it. Their items look pretty good, honestly. Their apparel, not shabby at all. Cover Ross UF. Yeah, these are anytime branded fitness. Not bad. Definitely priced like at like a premium apparel, but you can see this is not like typical gym apparel that you see that just looks really damn ugly. Like this is, I think this is aesthetic. Personally, I think it's yeah. They look right. Yeah, they look pretty damn good, right? Like if I were to click in one of these, like model, is there a model wearing this? Like I would rock this. I would definitely rock this. And a collab with Everlast. Like this looks dope too. All items. So they have cover Ross. It seems like they oh, sold out too. Damn. What is cover Ross? I've never heard of them before. But this is like a, I guess, lab type thing. Merchandise, miscellaneous goods. So now they have, yeah, they got hydro flasks. They got. So that's, yeah. This is another like. It's probably not that big of a growth driver, but it is a growth driver in that kind of supplements. Yeah, I saw that coming. No protein powder. What the heck? That's like the first thing I think of, in terms of. Anytime Fitness is a luxury gym in New York City. Oh, Equinox. Yeah, almost getting that NYC Equinox feeling. Yeah, no, this is, I mean, anything Japanese, people like put effort into actually making the stuff look good, I feel, right? But if you look at probably, if you go to any typical gym in North America, some of it just looks really like, I don't know, ugly, I would say. But this is Japan, so probably do things a little bit differently. Um, hmm. Oh, I'll probably have to go back. Back. Okay. We're done. Okay. Next. Online store. Pop-up store to promote sales of A-Prop merchandise among AF members. That sounds good. Some directly run clubs installed an in-store vending machine stocking A-Prop merchandise. That's also smart. You don't need people to man this. Merchandise, socks, bags, underwear, boxers, up, other stuff. Building long-term touchpoints, AF base, number of club, number of members, clientele with high exercise habits and health consciousness, clientele with desire to enhance their lifestyle. So definitely lots of opportunity to upsell. Yeah, so look at review the next period. So 6 times EV EBIT. I think for this type of company that's so stable, I think this even at current prices are kind of cheap. I wouldn't say like super cheap, but like this is like what do you want? This is good. We're growing revenues, expanding operating margin, expanding overseas. It's not like super undervalued, but it's good. It's just like how will they allocate their cash? We want them to see them utilize cash in a productive manner. Yeah, too bad I'm not a Japanese citizen regard in that, and all foreign shareholders don't get this, but like you get these discount vouchers if you own a certain number of shares to use on their online store, which is kind of funny. So if you look back at the website, I guess whatever. I think some hoodies were like 130,000 yen or something like that. So you'd get it for 100. So not great, but not bad either. Number of employees has stayed relatively, stable. So hinting at operating leverage again. Yeah, and then Anytime Fitness, Fast Food Japan owns basically 22% of the entire global stock of fast dating. But the thing is in Japan, right? Like the thing is in Japan, people frown upon to approach girls at the gym. It's not really in their culture. This is more that's more of a Western thing. In Japan, people you typically don't do that. So participation rate is increasing, which is good, and it's recovered since 2020. this might be like a new trend, right? Like if it goes from like 4.5% to like, what happens if it goes to like 10%? What happens if it go to like 7%? I do think that the younger generation will be more and more health conscious for sure, and like be more and more active. Yeah, for fitness clubs in Japan, they were the first to do like the 24-hour fitness, and then everyone started doing a 24-hour fitness. So yeah, but they were definitely one of the pioneers. Yeah, franchise owners own around on average 5.7. So because franchise owners are so profitable, they just want to open as many as possible. Um, Now they probably don't. They have so many happy franchise owners. They don't need they don't need more to advertise to get like if there's a new franchisee location that they identify, it's probably going to get bought up easy. Yeah, so you differentiate this from North America. So the key thing is you should have a read of my Fast Finish Japan talk pitch, and you'll understand why. Essentially, essentially, they operate much smaller square footage. This is not like in North America where you have big land masses. In Japan, you have finite amount of spaces. So the business model in Japan is very different. They basically rent out, in these commercial buildings, smaller square footage. So these square footages max out essentially, um, at around I want to say 8 to 1,000 members per store. And so, yeah, but what that affords is that the break even level is also much lower. So it's only 500 to break even, right? So if you think about it from operating leverage perspective, it's really good. And another thing that they do is because they're smaller formats. Yeah, they're smaller formats. They're way more convenient. They can literally open up near train stations and where there's high traffic, right? So that's why they were able to grow so fast and be one of the pioneers. Okay, yeah. So overall, looks good. I mean, they're on track. They're executing on their plan. I just hope that they ramp up their growth engine in Germany and Southeast Asia. And if they can do that, like this is cheap. This is cheap. They can definitely continue to grow. So, are they super undervalued? Probably not. If we look at just an overview, right? Like they trade as low as like this much before, like oops, wrong company. That doesn't make sense. Okay, so all oh they IPO'd in 5,000. Yeah, so because they were growing opening store counts so much, but then the thing was like other people started opening 24 hours, even though they opened suboptimal locations. That was enough to kind of just take market share away from them. But the overall business economics of the company is very good, very good. And then I think what the market is okay, given this period of time, they had to basically took up a lot of market share within the Japanese domestic market. Now we see that okay, the growth in domestically is going to be limited in a sense, or that it's increasing at a decreasing rate. That the only path forward is to expand internationally, right? I think at this valuation, it doesn't effectively account for the international expansion equation part of the equation. And I think that that's what will allow it to experience more upside. Yeah, but yeah, if it ever drops down to 1,000, easy buy, like easy buy for this company. And the stock seems to be a very defensive stock because in April, when there was a big tank, only dropped to like barely 1,200. So yeah. Okay, so yeah, we've been streaming for 2 hours now. It's late where I'm at. I'm gonna head to bed after this. So shout out to 8, shout out to Bulbin, shout out to Zilia. Thanks for tuning in. Thanks for asking questions and engaging. I will catch you guys next time. Oh, and don't forget to like and subscribe to my YouTube. Right, our weekly goal is 100 subscribers. So if you haven't subscribed yet, please subscribe, and also follow me on my Substack.